So we have to remember that not all EMs are built the same, but definitely for the most part, all EMs are going to have the boogeyman on inflation. So most of the time, the answer is going to be bad inflation. What is going to happen is that this excessive QE, this excessive monetary stimulus that actually EMs have had could de-anchor the inflation expectations, and this could turn around ugly if actually central banks don't have this accommodative credibility, this policy credibility moving forward. What happens is that they need to keep the credibility of anchoring the inflation expectations soon. Otherwise, it could spin out of control. However, we believe that so far they're doing a good job.
Can I ask you about inflows then to emerging markets? I think investors are concerned about any overreaction to the Fed down the track if it doesn't get its communication right, and some sort of a taper tantrum round two that we could witness. What can you say about how safe it is to put money into these countries, and whether you would be inclined to follow money into the bond market versus equity at this point, just on the stickiness of some of these local markets?
Definitely. So far, we have seen that the recovery has been somehow strong for the flows overall across the EM complex, with stronger flows into EM Asia and some other locales. However, definitely the policy moving forward for central banks is going to be very important in order to do this. What matters at the end for flows, independently of the asset classes, is going to be the rate differentials, how actually more attractive EM assets are going to be with respect to DMs because of the surge of yield. As long as you see that there's going to be a move for normalizing in the G3 countries, we're going to see a little bit of throwback of flows across the EM complex. It's going to be interesting to see how EMs are going to be responding to this. Some have already been doing that. You heard before the Russian central bank, for example, but some others may be lagging behind. This is going to affect at the end the real yields and how this is going to play into the markets. So far, I feel confident enough about EM asset classes. Definitely equities are going to have a high correlation with what's going on in US markets mainly, but G3 overall. And bonds so far have been something positive because of this great accommodation. However, if the tapering accelerates, we could see a change in this positive trend.